Hi, this is Raman. Welcome to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. Today we'll take a look at a double bottom trade setup. A double bottom trade setup is when price comes into a support level and then bounces off of that level, and it does that twice. Now this shows us that price is likely to rise from this point on. So let's go on to the charts and we'll take a look at what a double bottom trade setup looks like, how to enter a trade based on this type of a trade setup, where to place your stop loss, and most importantly, how to exit the trade with a profit. Here we are looking at a double bottom trade setup. This is pound US dollar 15-minute chart. A double bottom is formed when price comes into a support area and then bounces off of that and then comes and tests the same level once again and again bounces off of that level. So this is the formation that we are looking for. We have twice. We see that the price tested the same level twice and is not able to break below that level. So once we get this type of a double bottom formation, we're looking for some solid candle close, just like this one here. That's a solid bullish engulfing candle close. This suggests that price is likely to move higher now because it hasn't been able to break to the downside. So now we're looking for long entry here. So this is our bullish reversal signal. So we'll enter the trade long and we stay with the price as price moves higher. And here we see that once price comes into the next support and resistance area, we see a bearish engulfing candle close. So this is a reversal signal in the opposite direction. So it's a good time for us to exit the trade. So just to recap, a double bottom trade setup is when price comes and tests a support level once, bounces off of that, and then comes and tests the same level again, but is not able to break to the downside, and we get a bullish candle close here. So this shows us that price is not able to break to the downside, and chances are it's likely to continue upwards now. So this here gives us our double bottom, and especially double bottoms like this that are intraday double bottom. This divider here is a day divider, so this is the next day here. These type of intraday double bottoms are quite effective and they're high probability trade setups. So we wait for a bullish candle here, good solid bullish candle like bullish engulfing candle close here. We enter the trade long. Our stop would go below the pin here. We want to make sure there is room for trade to breathe here. We enter the trade long and we stay with the trade as long as price is moving higher. As it comes into the next support and resistance area, we see that the price bounces off of that level and we get a bearish engulfing candle close. This is a good time for us to exit the trade. From entry to exit here, we get 65 pips in the trade. So our profit is 65 pips or $650 if trading one standard lot. Thank you for joining me today. I hope you enjoyed this episode. If you like this video, please feel free to share it with your friends and don't forget to comment, like, and subscribe to the channel. That's it for today, and I'll see you next time.